AST SpaceMobile, known by its ticker ASTS, is not just another space company. It is on a mission to build the first-ever global cellular broadband network beamed directly from space. What does this mean for you? Well, it means your regular unmodified smartphone could get a strong signal anywhere on Earth. Imagine sending texts, making calls, or streaming video from the middle of an ocean or a remote mountain trail. This is the future ASTS is trying to build. Their goal is to eliminate the dead zones that plague our modern world, connecting the estimated 3 billion people who currently lack reliable mobile broadband access. The company aims to make connectivity a universal constant, not a geographical lottery. The real magic lies in the company's unique technology. Unlike competitors who might only offer basic text messaging from space, ASTS is aiming for full broadband speeds. The company's technology is designed to deliver up to 120 megabits per second directly to standard mobile phones. This is a game changer. It means users won't need a special satellite phone or a bulky terminal. Your everyday iPhone or Android device will simply connect to a satellite as if it were a local cell tower. This direct-to-device capability is protected by a massive portfolio of over 3,500 patents and applications, giving ASTS a significant technological edge in a very competitive field. This ambitious vision is powered by enormous satellites. The company's Bluebird satellites are equipped with phased array antennas that are 693 square feet in size, the largest ever deployed on a commercial spacecraft. These giant antennas are necessary to capture and redirect signals to and from standard phones on the ground. The technology works by essentially creating a cell tower in low Earth orbit that can talk to your phone without any special modifications. This is a monumental engineering challenge, one that has never been successfully accomplished on this scale before. If ASTS can pull it off, it will redefine what we consider possible for global communication. The potential impact of this technology cannot be overstated. For individuals, it means safety and connection in previously isolated areas. For businesses, it opens up new markets and improves logistics in remote regions. For governments, it offers new capabilities for emergency response and national security. The company is not just selling a service, it is selling a solution to a fundamental problem of modern life, the digital divide. By partnering with existing mobile network operators, ASTS plans to integrate its service seamlessly, making it an extension of the cellular plans people already have. It is a bold plan to wrap the entire planet in a blanket of connectivity. The journey for ASTS stock has been nothing short of a roller coaster, earning it the label of a meme stock. In 2024, the stock experienced a breathtaking surge of nearly 300%, captivating retail investors and market spectators alike. At its peak, the stock was up over 700% for the year, showcasing the kind of extreme volatility that defines this category of investments. These dramatic price swings are often driven by social media hype and community enthusiasm rather than traditional financial metrics. While this excitement has brought significant attention to the company, it also introduces a layer of unpredictability that can be daunting for more conservative investors who prefer steady, predictable growth. However, calling ASTS just a meme stock would be a massive oversimplification. Behind the stock chart volatility lies a solid foundation of strategic partnerships with some of the biggest names in telecommunications. The company has secured agreements with approximately 50 mobile network operators around the globe, which collectively serve around 3 billion subscribers. These are not minor players. The list includes industry giants like AT&T, Verizon, and Vodafone. These partnerships are crucial because they provide ASTS with a direct path to market. Instead of building a customer base from scratch, ASTS can tap into the existing subscribers of its MNO partners. The nature of these agreements speaks volumes about the confidence these telecom leaders have in ASTS's technology. In May 2024, AT&T extended its commercial agreement with ASTS through 2030, a clear, long-term commitment. That same month, Verizon put its money where its mouth is, committing $100 million to the venture. This investment included $65 million in commercial service prepayments, essentially paying in advance for future satellite capacity. Vodafone has also deepened its ties through a joint venture that gives ASTS exclusive distribution rights in nearly 30 countries across Europe, significantly expanding its market reach. Beyond the commercial sector, ASTS has also made inroads with the US government. The company holds 5 contracts, including a significant $43 million deal with the Space Development Agency. This indicates that the technology has potential dual-use applications for both civilian and defense purposes, opening up another valuable revenue stream. These high-profile endorsements from established corporations and government bodies provide a powerful counter-narrative to the meme stock label. They suggest that ASTS is not just a speculative play, but a serious technological contender with a viable business model supported by industry titans. AST SpaceMobile's grand vision depends entirely on its ability to build and deploy its satellite constellation. The company took a massive step forward in September 2024 with the successful launch of its first 5 commercial Bluebird satellites. These satellites are now fully operational, proving that the core technology can be deployed in space. This was a critical milestone, moving the company from a conceptual phase to an operational one. The successful deployment demonstrated that its massive 693 square foot antennas could unfold and function as designed in the harsh environment of space, a key risk that has now been retired. The company has an aggressive launch schedule to build out its network. Following the initial launch, ASTS plans to send another 17 satellites into orbit in the first quarter of 2025. The near-term goal is to have a total of 60 satellites operational over the next 2 years, with a long-term plan to expand the constellation to 155 satellites by 2030. To meet this demanding schedule, ASTS is ramping up its manufacturing capabilities. The company is targeting a production rate of 6 satellites per month by the second half of 2025. Executing this rapid scale-up is one of the most significant challenges the company faces in the coming years. From a financial perspective, ASTS is still very much in its investment phase. The company is not yet profitable and is burning through cash to fund its ambitious satellite production and launch plans. As of June 2025, its financial statements show operating losses and a deeply negative gross margin, which is expected for a pre-revenue company making huge capital expenditures. However, the company has been successful in securing significant funding. It recently raised $460 million through convertible notes and held a pro forma cash position of around $1 billion in early 2025. This gives it the runway to fund its immediate operational plans. Despite the current losses, Wall Street analysts are optimistic about the company's long-term revenue potential. Projections from firms like Deutsche Bank are incredibly bullish, forecasting revenues to grow from $50 million in 2026 to $1.4 billion by 2027, and a staggering $5.1 billion by 2030. Some forecasts even project revenues reaching as high as $35 billion by 2032. Analysts expect the company to become cash flow positive by 2027, once it has around 25 satellites in operation generating service revenue. The financial story of ASTS is one of high upfront investment for the promise of massive future returns if its network becomes fully operational. Investing in AST SpaceMobile is a bet on a potentially revolutionary technology, but it comes with a significant number of risks and challenges. The most immediate hurdle is financial. Building, launching, and operating a satellite constellation is incredibly expensive. While the company has secured over $1 billion in funding, it will almost certainly need to raise more capital to achieve its goal of 155 satellites. This ongoing need for cash could lead to shareholder dilution if new shares are issued, or it could add more debt to the balance sheet. The company's future success is directly tied to its ability to continue funding its operations until it generates substantial revenue. Another major challenge is execution. ASTS has an aggressive timeline for manufacturing and launching its satellites. Any delays in production, launch failures, or technical issues with the satellites in orbit could push back revenue generation and increase costs. The company must prove it can move from producing a handful of satellites to a mass production assembly line without compromising quality. Furthermore, it faces competition, most notably from Starlink, which is owned by SpaceX. While Starlink currently focuses on fixed terminals, its partnership with T-Mobile for direct-to-device services puts it in the same arena, and its first-mover advantage and launch capabilities cannot be ignored. Finally, the company must navigate a complex web of international regulations. Securing the rights to use spectrum and operate its service in different countries is a complicated and time-consuming process. Each country has its own regulatory body and rules, and gaining approval across its target markets is a critical step for global service delivery. While its partnerships with MNOs help streamline this process, Regulatory hurdles could still cause unexpected delays or block entry into certain markets. These operational, financial, and regulatory risks are substantial and should not be underestimated by any potential investor. In conclusion, the investment case for AST SpaceMobile is a classic high-risk, high-reward scenario. Supporters are incredibly excited about the company's disruptive technology, its massive addressable market, and its impressive roster of industry partners. They see a company on the verge of solving a global problem and unlocking billions in revenue. On the other hand, cautious observers point to the immense execution risks, the high cash burn, and the fierce competition. They see a company with a long and expensive road ahead before it can prove its business model is viable. For investors, the decision comes down to their tolerance for risk and their belief in the company's ability to turn its cosmic ambition into a down-to-earth success.